The month of July can bring high expenditures. We've got major holidays. We've got vacations. We've got that sort of summer free time. If you have kids, they may want to do certain camps or go certain places and experience different events. So there could be some high expenditures, which is why it's always good to have Tim Fitzwilliams here from Fitzwilliams Financial. You may know him from our 4 p.m. broadcast when he joins us every Tuesday. This Tuesday, a little extra time to hang with us here in the studio. But last Tuesday, we did not see you, Tim. Yeah. We had another individual from Fitzwilliams Financial who did a great job, but you weren't here. Where were you?
I was in Canada.
Okay, do tell.
Banff, Canada. It was amazing.
Give us a highlight.
It's so beautiful. The mountains are amazing. The pictures don't do it justice. It's just wild to see that. It's so incredible to see these huge mountains with snow-covered tops, or sitting there having fondue with the view, as it was called.
Are we talking chocolate fondue or the cheese?
No,
kind?
the cheese fondue. It was
nice.
had a German twist on it. It was pretty cool.
Very cool.
Yeah, it had a nice strudel. I don't normally eat like that, so that was a real treat.
This is fancy stuff right here. I
Yeah.
guess, you know what? I know people want to get to the financial advice, but at some point we're going to talk about the merits of cheese fondue versus chocolate
Absolutely.
fondue. I'm a cheese fondue guy myself. I'm right there with you, Tim. Now, I'm assuming that you were able to go on such a nice vacation and with great food and great views because budget, budget, budget. That's what you tell us. Whenever we talk about being able to reasonably get to those vacations, budget is a big part of it. Now, I know that you're supposed to budget all year up to that vacation. But when it comes to the vacation itself and understanding what you can spend on, what you can't, and how to maximize what you have, do you have advice from your position?
Sure, everybody's different, right? Mm-hmm. So if you give advice and say try to stay within your budget, everybody's budget is different, and everybody's version of a vacation is different. Are you on a vacation and you're staying at the Ritz, or are you staying in a camper? And it's about what you enjoy. So you really have to be honest with yourself. Instead of just saying, we can cut back and do this, just be honest and say, if I go on vacation, will I enjoy this? And that's the biggest thing. And it's figuring out your budget and what you're spending to match what it is reasonable. And then you kind of reverse engineer from there. You say, okay, well, I can put this much away a month, or I know that I have this much left over, right? I have a credit card with this amount and I can pay it off easily so I can get some extra points. However you want to game it, the idea is plan it into the budget. Yeah. And there's lots of cool software out nowadays that any financial advisor, including ourselves, whoever, can build for you to show you like what type of ROR you need in your portfolio to be able to go out on fun trips. It's always nice if you can do something when it's just kind of off the interest that you made, right? Off the profits, not necessarily coming directly out of pocket. So that's really cool nowadays. You can plan with nice software.
Can you tell us about any of the software?
Sure.
Is it something that you guys use for your vacation?
Most advisors have access to the software, but particularly we use something called eMoney. And so that takes clients' assets and it puts it into a program, and then that program analyzes different scenarios and kind of what-if factors, but at the end of the day, it's going to show you your income, your expenses, and your net. And you can really kind of figure out, well, if this is what my net is, where's my money? If it's not in my bank account, that means I've been spending it. So you kind of can rationalize a little bit easier, what, I probably did spend more on birthday parties, going out, summer camps, vacations, right? So what we try to do, and I think a great thing that financial advisors should try to do, and they don't do a lot of this, I think it's really important, is to sit down and have the conversation of what do you want to accomplish? I want to go to Disneyland. All right, cool. What does that mean? The VIP package where you skip the line to go in through the exit? Or do you just want to get in? Right? What does it mean to you? What is the number that you're willing to try to shoot for? Mm-hmm. And then let's go back.
The food's a little more expensive in there. Do you want to try a lot of the different foods?
Absolutely.
There's all different ways that all of a sudden your budget can kind of just go out of whack at a place like that. So you got to plan ahead for it.
But a lot of people don't do that. They end up just going and then being sticker shocked and just being like, oh, well, whatever, I'll just do it, take care of it. Because you got the little, in that example, you got the little watch band and you're just swiping everything, right? So it's really easy to get out of tune with your budget. Mm-hmm. So plan ahead, know what you want to accomplish, put parameters around that, and you should be good to go.
Now, when you talk about outside of the vacations, just week-to-week life, when you are looking to make a budget on your own, right? Hopefully, people are able to depend on professionals to help with this, but if they're in a situation where they're making a budget on their own, is it as simple as it sounds, where it's just you have a food column, how much are you able to spend on food? You have an events column, how much can you spend on events? You have are there any tips to creating that actual budget, or maybe common misconceptions that people miss when trying to do so?
So it's kind of like eating right, exercising, and getting good sleep. It's not the hardest thing to do, but to do it consistently is the key, right?
Yeah.
And that's what it is about budgeting, right? Are you consistently going back over it and analyzing things? The setup is rather easy. A tip, if you will, maybe you look at things from a fun account. A lot of people don't just look at the costs and what they have, and they don't think about, well, this is how much I just want to spend on, like you were talking earlier about Amazon Prime. I just want to spend this much this month because I want to. Every month, I just want to spend this much. It's nice to have a fun account because when that goes down to zero, you're not spending out of other accounts that are for vacations or for paying your bills or paying down debt or whatever it may be. So I think it's important to have some type of fun budget. Be rational with yourself. Don't pretend you're just going to sit at home all day and, eat ramen and eggs. It's not going to happen.
Though I do love a good bowl of ramen and eggs. I'm not going to lie,
Sure.
but you're right.
Everybody
You're not
does.
going to do that every weekend. Now,
Right.
when it comes to the fun account, it seems by the name that has a very specific definition. When you're creating the lines of that budget, your son is getting really good at golf, so you got him a net to hit into in the backyard, and
Right.
the ball goes under that net and it hits a garage window, and that window's broken.
That happened.
You did not.
That happened here, yeah. My
Did that
son
happen?
was messing around with his volleyball, and boom, right through the glass, on top of the car,
Oh, boy.
scratches on the back, scratches on the front, had to get it painted. Yeah, so that was a surprise, right? So, exactly.
So where's the line in the budget for that?
Okay.
Should you create a space for those
Yeah,
things?
that's a great point. And that's going to be where our emergency funds come in, because it's going to be where we think about the oddities that could happen. And that's normally kind of a percentage. Everyone's different on that, on how much they feel comfortable about that. You can even use a credit card to have some of that, right? But you don't want to go so heavy in a credit card that you put yourself into a bad debt. But this is like an emergency. I didn't expect my window to break on my garage, nor have to get paint touch-ups done on my car, right? On multiple areas, because glass likes to scratch in a wide array. So that's where you're like, okay, well, do I have some stock drawer money? Do I have some extra money put away? So I think what we're getting at is, do you have a column, to your point, a column that is there for emergency purposes? And I think you should.
Let's say that you do create the emergency column. You get to the end of the month. Turns out you made it through without any emergencies.
Right.
Everything was okay with the car and the
Life was
window
good.
and the kids. Now, would your advice be, I roll that over because we know an emergency is always coming in the future? Or do we say, well, I can just transfer this up to the fund budget here for this weekend? How
Look,
do you
I think
kinda
that's a
manage?
comfort level,
Yeah.
right? If you feel like your emergency can handle the most standard emergencies, then why not maybe have some fun with it? Because you did good. You did a discipline. You had your emergencies taken care of. You have a fun budget. You paid all your bills. You have to enjoy life. It's just like if you're dieting. If you're not having that cheat day, if you're not having that moment to where you can relax, right? It's one thing to go hard in the gym and to do everything. It's another thing to be consistent. And so it's the same thing with budgeting. If you're being consistent, reward yourself.
Yeah. Yeah, because that'll help you continue to be consistent, right?
Absolutely.
Because
You'll
you're not
feel
so
great
heavily
about it when you're on
restricted.
vacation. You're like,
Yeah.
you know what? All this is working out the plan.
Yeah, I'm trying to take this to heart because I do have those weeks where, wow, there were more cheat days than regular days in there. I got to get back
Sure.
on track. Is your kid getting good at volleyball at least?
He's getting better, yeah.
Okay.
He's not allowed to try to practice against the garage door anymore.
Okay, we changed up the practice routine
Yeah, we
a little
changed
bit.
up the rules.
Now, something that you and I have talked about a little bit before is the when it comes to the stock market, and we have seen a couple of very big corporations either enter into the stock market in terms of SpaceX, or getting prepared to have that IPO when it comes
Sure.
to Anthropic and a couple others. Now, you and I have talked about how, as it stands, the stock market puts a lot of its weight onto a very small number of companies. And so you have these large companies that are now entering into that environment. Are they going to help disperse some of that weight? Is that a benefit of such a large initial public offering that has drawn a lot of scrutiny, but will it help to disperse some of that weight?
In my opinion, I don't think it's going to disperse. I think it replaces. I think the way to look at that is it creating what we call in the industry concentration risk. Like if you have a mutual fund and I have a mutual fund, what's the chances of it having Apple?
Hi.
There you go.
Right.
So what if we did something different and we said, instead of investing, let's say, in NVIDIA, right, directly, maybe we look at the companies that NVIDIA is affecting or that sector as a whole and kind of find things that marry with it. So that way you're not concentrated into just one area, right? The idea is, can I spread that out? And that's something we practice on a daily basis, honestly. Really, we look at that consistently with our investment side of the house and our chartered financial analysts. We're looking at that. So a good financial advising firm should be looking at those things, because you don't want to be concentrated. As you're stating, you're talking about the Mag 7, you're talking about the Magnificent 7 that hold, 34, 36%, depending on how you do the math. They hold that much weight of the total S&P 500. And like we just said, if we both have a mutual fund, there's a chance that some of them are in there. So concentration risk is very, very real. And it's important to make sure that you're well diversified by kind of spreading out and finding out what those key stocks also are affecting. Maybe it's affecting some warehouses here, maybe it's affecting this, maybe it's affecting some other type of industry, and find other companies that synergize with it. Now you're getting the effect of the gain without all the risk and just being in one basket.
And looking over some of these numbers that we have seen, there's a little bit of a contradiction in some of the macroeconomic numbers that we've been seeing here in the U.S. Consumer confidence in the economy is relatively low, at least compared to past years and even past decades, and yet spending has remained somewhat uniform, if not maybe an increase. That conflation is strange to me.
Well, we've talked about it a lot, right? All of this comes down to the oil crisis and how far we were getting to the end of the plank, if you will, to where we have a true meltdown crisis. And as that works itself out, which it seems like it finally is working itself out, remember, the oil prices created a lot of concern in consumers, and there goes your consumer confidence. So we're looking at possibly seeing the lowest oil prices we've ever seen, because the U.S. has entered in at a 25% distributor, right? They're worth 25% of the oil market is what's being created by the U.S. And then you got other countries that's coming to the table, because nobody wants to see this Iran situation ever happen again. So what that means is that oil prices could go down. And then if oil prices go down, we're hitting what we talked about all these times. We just kind of had a little time out with this oil situation with Iran. But if we have oil prices come down to regular or even below the standard of where we were, you're about to hit that growth spurt of that hockey stick in the part of the economy where there's a lot of good growth. And so I don't think it's a concern for consumers. It's a short-term issue, maybe stretching a little bit into the midterm. We've been talking about it for a while, the Iran crisis and the oil situation. Is it going to be a crisis or not? But the facts are it's going to work itself out. And when it does, I think we're going to have a great, what we'd like to call a jobless expansion, as AI is going to become more and more important for people keeping their jobs and developing their job roles.
Okay, now we also talk about these July vacations. July brings a lot more than just vacations. It brings a litany of new laws here in Virginia and the Commonwealth, and of course in Hampton Roads. What stood out to you?
Yes, so I think the biggest thing that stood out to me is this new law around employers, regardless of the type of entity, now have to offer a retirement plan if they have 5 or more employees. And here's the kicker. Those 5 employees include part-time and yourself possibly. So this is a big deal for a lot of small businesses. They're now going to have to offer some type of retirement plan to their employees. So that's probably the biggest thing that I see that's coming out on July 1 that's going to have the greatest financial impact.
If you're someone who already is operating within a company that gives you that plan,
sure,
how will this affect you?
Well, if you're already operating in a company that's giving you a plan, it won't.
Okay.
This is for companies that are small businesses, mom and pops, maybe they own a coffee shop, something like that. They have a few employees, a couple of those employees are part-time, and now they have to offer this 401k, which can be expensive. It can be very expensive. It can be very complex and very complicated in executing those things the right way. There's different rules and laws and all types of fun things that jump out at you when you're trying to set that up. So my advice is do not try to set that up on your own. If you're one of those people that need that help to set that up, that you don't have one of those, but you are going to qualify. And there's one other factor there, and it's if you've been in business for at least 2 years. But even if you're new, you should be thinking about it, because 2 years is going to go by before you know it. So my point is, if you need help and you need to talk to a tax professional, call someone, talk to someone. You can call us if you'd like, or you could call your current advisor or a tax professional. Whoever you can call, get advice. on how you can execute that, so you're not rushing to get it done, and then you end up having a really expensive setup.
As is the case with individuals, small businesses, and even large businesses could also use advice to handle all of these things efficiently and effectively, of course. Now, a question that we ask you quite often, but that we like to continue to check in on you with, is home buying.
Yeah.
Right? Because it's something
Houses.
that stays in the headlines.
Mm-hmm.
It's something that a number of state and the federal government are looking to take steps to improve upon. There was a housing bill that looked like it was ready to get signed last week that ended up not getting signed by the president. But it's something that obviously is a major focus for not just lawmakers, but for everyday citizens. When it comes to those high borrowing costs that are in place right now, should potential buyers wait for those rates to fall? Or is this something where they should still be active in the market looking to get those homes?
Well, I think you have to understand the history of how we are getting to where we are right now. And it all goes back to that oil conversation again. So there are all these countries that had U.S. bonds, and they needed to sell those bonds so they have cash so they could go buy oil. Well, when you sell bonds, you put a whole lot in the market, the price is going to go down. And bonds are unique and they work like a seesaw. If the price goes down, then the yield goes up. And since we're looking at the 10-year treasury, which affects mortgage rates, then the mortgage rate goes up. So the question is, are we in a high interest rate environment or going to a higher interest rate environment, or is it just a temporary thing because of the oil situation? So what's really going to matter is, I don't think you should make some major hold on a life-changing decision because you're trying to play the game of the interest rates. If you can get through your dream home now, do it. You can always refi later. But understanding the why might give you a little bit more comfort of understanding whether or not you believe as a consumer is more of a short-term concern or a longer term. We tend to err on the side that it's more short-term to mid-term. This oil thing, like I keep saying, will work itself out, and as it does, we should see housing markets and interest rates around the housing markets be at a normal level.
We've talked about, especially when it comes to investing, it can be trying to beat the market. Oftentimes for everyday investors is something that could get you into trouble. Maybe you're saying that when it comes to home buying as well, that could hold true.
Well, you never want to try to beat the market. You never want to act on a knee-jerk reaction or act in fear. That's the worst thing you can do. You always want to act with a plan. Now, it may look like you're moving quickly if you're in a plan, but if you had a plan before the action started, then you're just following the plan, right? So a lot of people get confused when they see firms like ourselves who are rebalanced on a weekly basis and think, oh, maybe I need to move that quick and do those things. But they have to understand when we buy something, we have a sell plan. So it's not arbitrary that we're moving that quickly. It's that we wrote a plan for us to do so. Not someone who's gotten excited and said, I want to jump in on this. I can't wait. I need to get on SpaceX. I need to do this. I need to do that. And kind of following the headlines, that's what we don't want to have happen. That's the biggest concern. So as it relates to the housing market, it's kind of like the same thing. Don't get super excited over thinking that interest rates might be there, especially if you understand the history of things. We're probably going to just work itself right on out. Don't stop yourself from buying the house that you need. And again, you could always refi if you needed to. So if you do believe interest rates are going to go up, then now's the time to jump in. And if you believe it's going to go down, then jump in anyway because you can go ahead and can refi. That's how I look at it now. Everyone's different, and you have to believe the story behind it. But at Fitzwilliams Financial, we believe that story. We believe that the oil crisis is working itself out, and things will return to a normal, and we're going to have a great boost in the economy as we hit that growth spurt.
All right. Fitzwilliams Financial always have a plan. We have a plan. Our plan is to see you in our 4:30 broadcast on 13 News Now.
Yes, sir. That's right. Can't wait.
Anything else you want to add before then?
No, that's great. I'm excited.
Tim Fitzwilliams.
Thanks for having me.
From Fitzwilliams Financial. We always get to talk to you at 4:30. Nice to have you here in the Live Impact News studio to hang with us. We get that privilege every once in a while, and today was a perfect day to have you, so thanks for coming by.
Thank you so much.
All right, again, in the 4:30 show today, Tim Fitzwilliams will be there answering more questions, talking more financial advice in our weekly financial forecast.